Good morning, folks, and welcome back to Almus Market Mornings. An eventful week is ahead of us. Traders are awaiting the payrolls data at the end of the week, but there's a possibility, due to a government shutdown on October 1st, that data might be delayed. The last government shutdown happened during President Trump's first term, which was also the longest shutdown in the history of over a month. In other developments, a senior South Korean official said they are unable to pay $350 billion to the US. Remember, as part of their trade deal, there was an investment to be made by South Korea to the tune of 350 billion. I think currently those details are still being negotiated, but really interesting times ahead. Good morning, JK. So, for our listeners, what does this government shutdown mean, and how will it impact the markets?
Good morning. I think when there is the federal funding, which requires approval from the Congress, is exhausted, and they need renewed permission for spending more. That is when this threat of government shutdown arises, and it is not anything new. I think since 1985, at least 15 times this has occurred. And usually it starts with the shutdown of non-essential services and gradually gets expanded if if there is no deal. Critical functions like military will of course continue. And White House has already directed agencies to prepare reduction in force notices and permanent layoff for programs not aligned with Trump's priorities. So that is some departure from the previous times. So that's definitely more draconian than usual. Where usually the prior shutdowns they have used furloughs, which means that temporary layoff. So to that extent, this is a different event. But then we'll see whether there is going to be a last minute deal, or whether it's going to be a partial temporary shutdown, or it's going to be extended. In any case, it's not a good thing for the US economy, which is already in a kind of tem- uh, tentative position, despite all the data that we have seen. Then of course we had the data on Friday about the inflation, and the inflation numbers. Uh, Most of them came in line with the expectation. Although again, I have to say that they were above the Fed target of 2%, well above the Fed target of 2%. But since no major pass through of inflation from the tariff price increases, tariff-led price increases were not passed through. I think the inflation remained somewhat, on target, or rather as expected. Therefore, this keeps on track the expectation that Fed will cut rate when they meet in October and December. That is at least as of now. And market, of course, is discounting more than that. They are expecting a cut of two more this year and two more next year as well, as against one that the Fed dot plot has indicated. Apart from the PCE inflation, we also had the Michigan survey final report, which showed that the consumer sentiment had dropped by 5%. But at the same time, inflation expectations have also slightly dropped for both long term, that is 5 years, as well as 1 year ahead inflation. We had data on personal spending that again rose to 0.6% from 0.5%. So US consumers are not taking a backseat. They have been spending, which keeps the economy going, because consumption happens to be almost two-thirds of the US economy and the GDP as well. Now, as we saw on Friday, the dollar did not have much reaction to the data, and having already risen in a correction in the prior 2 days, we saw some retracement to the downside. Euro went above 1.17, but all within the range. And I think market is really looking at the next direction for the market. However, the on the rupee side, it was a very ranged market. And it is interesting that after moving a big in the earlier part of the week, reacting to the visa-related new regulations from the U.S. government, it has stayed, below 88.80 for rest of the week, thanks to RBI intervention, reportedly in the OTC market, futures market, as well as the NDF offshore market as well. However, at the same time, we have seen that the stock index has hit negative 2.5% last week. FIF outflows were to the extent of 1 billion, and there were also 100% tariff on pharma exports to the US, which of course, India is much less affected. And there is no real progress on the trade deal, although there are 2 points that emerge from the Indian side. One is India will probably increase energy import from US, and also something contentious that they're probably thinking of importing corn for the purpose of ethanol, and that we'll have to see what kind of reactions that we will get in the in the Indian side. However, the there is no reaction from the US side, positive or negative, to this. So Rupee awaits the next direction until the RBI keeps intervening. The rupee can hold its line for some time. Now, as we are ending this half year at September end, I am observing some very interesting things. And the gold, which has risen well above 100% in this cycle, hit its bottom, and it started rising in September of 2022. Similarly, silver also had seen the bottom in October 2000, or late September 2022, and these have moved significantly from there. Silver has moved almost 150, gained almost 150%. And now, actually, while the trends are not changing, there some analysts are seeing whether they are not adequately priced, or whether they are priced sufficiently. And so that is something that we need to see. Also, I observed that the Indian stock market had hit its all-time high in the month of September 2024. Of 26,227. Since then, the Indian market has actually given a negative return for the last 12 months. So September 24 to September 25, Indian Nifty index has seen a negative return of 4.4%, whereas most of the other markets have, major markets have given returns on an average of about 15 to 18%. That's a gross underperformance by the Indian stock market. And we also had in this last 12 months as much as 27 billion of outflows from the Indian market by the FIS as well. And now we are, down nearly 5% from the, peak of 26,000 that we have seen in the Nifty index. So now, and we are also in the month of September. So September, as I said many times, these markets, I mean, let me also remind that it was in September 2022 that euro had seen a bottom at 0.9550, and dollar index had hit a high of 114.84. So significant, month as far as September is concerned. We just wait and see whether we have another major turnaround in any of the markets from here on. We are coming to a quarter end, half year in for many of the many of the countries, and also a month end. So a very interesting time, and we also head into a time when US government shutdown is on the cards, and we have probably the labor data, which is key for US monetary policy, will also be published unless there is a difficulty because of the government shutdown. So we're looking forward to a very interesting week, or interesting month, I would say, for the markets. Thank you.
Thank you, Jack. And interesting times up ahead, as you said. Just quickly summarizing, dollar did not have much of a reaction to Friday's data. There was some weakness, but all within the broad range in which dollar index has been trading. Rupee traded in a very narrow band, and Surprisingly, dollar rupee has been trading below 88.80 even in the offshore markets, thanks to the central bank's intervention. We also saw some pressure because of the Indian benchmark stock index, which has seen some selling last week and the related FII outflows. Other than that, I think this week we will be looking forward to how the government shutdown, the threat of the government shutdown is mitigated. White House has already plans for reduction in the federal workforce, permanent layoffs. This time, the strategy seems to be a little different from the bipartisan deals we have seen previously. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates.